Four former Transnet executives have been granted bail of 50,000 rand each. That's after appearing in the Specialized Commercial Crimes Court at the Palm Ridge Magistrates Court today. Brian Molefe, Siyabonga, Gama, Anoj Singh and Thamsanqa Jiyane face charges linked to a controversial locomotive deal. The case was highlighted in the state capture investigations. Private sector credit extension rose modestly in May. According to data released by the Reserve Bank, claims on the domestic private sector, which is a broad measure of lending activity, totaled 4.9 trillion rand during the month. This is a 0.6% increase from April and a 5% rise from the same month a year earlier. The increase was supported by firmer corporate borrowing, while household demand for credit remained restrained. Exxaro has warned of a fall in coal production and sales volumes for the 6 months to end June. That's amid subdued demand from Eskom and challenging market conditions. More detail will be available when the miner releases results on the 21st of August, but the firm has already indicated that it's hopeful that the situation will improve. The company says it's cautiously optimistic about the second half of the year. That's as it anticipates some recovery in coal demand as Eskom addresses its operational challenges and seasonal factors support thermal coal consumption in the group's key markets. Exxaro did, however, highlight that ongoing geopolitical uncertainties and infrastructure constraints continue to pose risks. MAS expects to meet its guidance expectations for the year ended June. The property owner says distributable earnings will be in the range of 9.37 and 9.79 euro cents per share. That's as consumption remains strong in all Central and Eastern European countries where the group operates during the first 5 months of the year, with all the firm's properties benefiting from robust trading. AECI says its performance in the first 5 months of its financial year were mixed. The firm's international mining operations recorded an improvement, while its local activities were impacted by challenging operating conditions and supplier headwinds. As such, revenue during the period was slightly lower, but earnings before interest, tax depreciation and amortization and profit were higher. That was propped up by an improved margin performance in AECI Mining's Asia Pacific region and a steady operational performance in mining and chemicals. Psilocybin has slipped into the red. The Special Purpose Acquisition Company has posted a loss of 585,000 rand. That's from a profit of 455,000 rand. The medical cannabis investment firm recorded cash outflows of just over 2 million rand during the period. It says this was in line with a deliberate focus to appoint service providers to start the process of acquiring a viable asset. That has now been done. The group has entered into a share purchase agreement with the shareholders of Psilocybin Pharmaceutical. This will result in Psilocybin paying 845 million rand for the asset. Strong, that's how Invicta has described its annual results. The investment company has posted a 14% rise in headline earnings per share. That's as its core operations delivered a resilient and consistent performance during the period. A dividend of 115 cents has been declared. That's a 10% rise on the previous period's payout. Advotech has appointed John Sikoitis as Group COO. The new executive role has been established to support the private education investors' growth plans. That's as it looks to expand its international footprint. The company said Sikoitis will bring a wealth of experience in strategy, IT, business development and commercial leadership across a wide range of industries in multiple geographies, including Africa and the Middle East and Asia. ArcelorMittal SA has accused Transnet of abusing its market dominance and charging excessive prices to the detriment of customers. And so the steel major has dragged the freight and logistics group to the competition tribunal for recourse. But the company faces a tall order in convincing the tribunal of the merits of its complaint. That's as the Competition Commission has already dismissed the matter. And AMSA comes to the tribunal on a self-referral basis. Transnet says it's confident it has no case to answer, given that the Commission found no merit in the steelmaker's argument. Dates for the hearing are yet to be determined. In international news, Nissan Motor has requested some UK and EU suppliers to accept delayed payments, aiming to boost its short-term cash reserves. This move would allow Nissan to maintain more cash on hand at the close of the April-June quarter. Here's more detail in this report.
Nissan has asked some suppliers to allow it to delay payments to free up short-term funds. That's according to several emails and a company document reviewed by Reuters. Nissan correspondence shows it has made the request to some suppliers in Britain and the EU. The move would allow it to have more cash on hand at the close of the April-June first quarter. Emails showed it also follows similar requests before the end of the last financial year in March. It's not uncommon for companies to request payment extensions from suppliers to help free up cash. Nissan said in a statement it had incentivised some of its suppliers to collaborate under more flexible payment terms, at no cost to them, to support its free cash flow. The emails were exchanged among Nissan employees in Britain and the EU. One employee told co-workers this month that suppliers were again being asked for an extension of payment terms. They further told colleagues it was in line with the aim to boost free cash flow requested from CEO top down. Nissan told Reuters its CEO did not mandate functional tasks in regions. Reuters was not able to determine whether Nissan made similar requests to suppliers in other regions. Nissan said in a statement it would not comment on internal discussions or specific targets. New CEO Ivan Espinosa has unveiled plans to shed around 15% of Nissan's global workforce as the Japanese automaker tries to boost cash. He also aims to close 7 plants as he targets $3.4 billion in cost cuts over the next 2 years. Nissan has been hit by falling sales and is weighed down by an aging vehicle lineup. The carmaker reported a $4.5 billion net annual loss in the financial year that ended in March. It's also declined to give a forecast this year.